Hello and welcome to the day ahead. It's Monday, January the 9th. I'm Andrew Gagan. Well, Wall Street rallied on Friday after December payrolls revealed wage increases slowed and services activity contracted, easing concerns about the Fed's interest rate hiking path. All major indices surging more than 2%, with the rally snapping 4 weeks of declines for the S&P 500 and the Nasdaq. Materials jumped close to 3.5%, while interest rate sensitive tech was up around 3%. Consumer staples were boosted by Costco, with its shares surging after the retailer reported strong December sales growth. Shares in Biogen rose after the US Food and Drug Administration approved its Alzheimer's drug for patients in the earliest stages of the disease. And Pfizer shares moved higher, with negotiations underway with China to allow drug makers in the country to manufacture and distribute a generic version of Pfizer's COVID antiviral drug Paxlovid. And Bed Bath & Beyond has continued to tumble on reports that the home goods retailer is preparing to file for bankruptcy protection in the coming weeks. Well, investors have been buoyed by Friday's non-farm payrolls report, which showed wage growth slowed in December. Average hourly earnings rose 0.3% after gaining 0.4% in the prior month, taking the annual rate to 4.6, the smallest increase since August 2021. The US jobs market remains resilient though, with non-farm payrolls increasing by 223,000 jobs last month, the smallest gain in 2 years, but higher than economists' estimates, while household employment rebounded more than 700,000 jobs last month. This pushed the unemployment rate back to a pre-pandemic low of 3.5%. And President Joe Biden welcomed the jobs report, which he described as a transition to steady and stable growth that I've been talking about for months. The jobs gains come despite layoffs in the tech sector and among real estate and finance companies. Well, the US 2-year Treasury yields fell to 4.26% and the 10-year pulling back to 3.56%. The currency market also pulled back on expectations that the Fed will continue its aggressive tightening, with the dollar index down 1.2% and the Aussie dollar rising to 68.8 US cents. And China has reopened its borders, which have been shut since the beginning of the COVID-19 pandemic. After 3 years, mainland China opened sea and land crossings with Hong Kong and ended a requirement for incoming travellers to quarantine. The border opening follows the start of Chunyun, the 40-day period of Lunar New Year travel, which is the world's largest annual migration. However, Beijing's policy reversal has triggered a wave of infections across the country. So to the local market, set to open higher this morning, with ASX futures up 1%. Oil prices were little changed on Friday, although ended the first week lower on global recession concerns. Brent futures settling at $78 a barrel. Iron ore prices rose on optimism around China's reopening and its economic stimulus for the property sector, although the effect of COVID outbreaks on steelmaking has limited the increases. Copper prices touched their highest level in more than 3 weeks on the prospect that demand will pick up in China. And the softer US dollar has boosted the price of spot gold, which jumped almost 2% to $1,864 an ounce. And the crypto market has seen positive gains over the weekend following the US jobs report, with Bitcoin just shy of 17,000 US dollars. Turning to the week ahead locally, we get building approvals today, tomorrow ANZ consumer confidence, followed by retail trade, international trade and the lending indicators, and overseas US consumer inflation plus US business and economic optimism. Thursday US consumer price index and inflation indicators in China, rounding out the week with US consumer sentiment and export and import prices. That is your day ahead. We'll see you again tomorrow.